Okay, so hello and welcome back guys to the channel. And on today's video guys, we're basically going to be dealing with VIX 50S, and we're basically going to be talking about this simple 5 minute scalping strategy that I've come up with. And it's a whole next level of a strategy in scalping the V50S, right? So before I get into it, make sure you like, subscribe if you haven't, turn that bell button on for notifications, and let's get into it guys. So based on the MMC footprint strategy, right? So everything that we do in this channel is pretty much based on the MMC footprint strategy. However, we may not use the strategy as a whole, but we could also use parts of it, to take out the most parts of the market, right? So the MMC footprint strategy is basically based on these three major things, which are structure, S&D, and confirm, right? This SSC thingy right here, right? So this is the whole steam or root of the MMC footprint strategy. Now, however, we may not always use these all three things, especially in the VIX section. But of course, the VIX charts are a little bit different from the currency charts, although the market structure is pretty much the same, right? That's why I said that we're basically not going to be utilizing all these three things in here, but at the most part, we're basically going to be using the most that we can get, right? So what we're going to be using today are these two major things, right? Which is structure and S&D, right? Supply and demand, right? The confirmation part, this is what we'll leave out on today based on this strategy, on this scalping strategy that I've come up with. So having a little bit having a little bit of what insight, right? Let's have a little bit of insight based on these three things, right? So in the MMC footprint strategy, right, we basically going to want to see a structure impulse, right? I mean, this is just an example in a bullish market, right? So we need to see a structural impulse. Now, once we have that structural impulse, the next thing that we're going to do is look for an S&D zone, right? An area that requires mitigation. Lo and behold, once we have that area that does require mitigation, then we're going to want to see price pull back or retrace to this area right here, in which we're going to be looking for the confirmation to take price bullish from here. Regardless, in that case, right, the most important thing in this structural impulse is that this structural impulse needs to have taken out a structure, right? So in that case, we need to see a break of structure before we can judge that this is a realistic structural impulse or not. Now, once we have this break of structure, right, then we can now look for the S&D zone, in which we'll want to see price retrace into for that mitigation, right? And once that mitigation is done, price can now move from here, right, and resume into its overall bullish trend in a bullish market, with the high as its next liquidity run. Now, lo and behold, today we're basically going to be talking about a certain trick, right? So the first thing we're going to do is zoom out to the maximum until we cannot see any candles, but we can only see price movement in terms of the overall movement, which is what? The institutional order flow, right? So once we have done that, the next thing that we're going to be looking for are those S&D zones as their whole, right? The last down move before the up move for what? For a demand zone, and the last up move before the down move for what? For a supply zone, right? In which you can reconfirm from here, right? That's, it's optional because the risk management is all up to you. So what we're going to be doing today, right? We're going to see a structural impulse, right? And once we have that structural impulse, we're going to judge a certain demand zone in here, right, from its structural point of view. And from that area, we'll be waiting for the pullback to happen in order for that mitigation to be complete. And once that mitigation is complete, we can now take price from here and resume to its bullish trend, right, with us being positioned in here, right, according to smart money plays, and be able to be a part of these big and huge moves in the market for us to be, a hell lot of profitable. So let's get into the charts and see exactly what I was saying, right? So the first thing is, first, zoom out to the maximum, right, and judge price from there according to its nature, right? So we're on the V50s, and you know what we can see in price movement is that price from here, right? So price went up. Okay. So price went up and created this high, right? The overall high, as I said before, we're judging price according to the institutional order flow. And from here, price came down to form this low. Lo and behold, price from here went up and formed this lower high in terms of what? Failing to break this high, meaning what? A short market structure has been what? Has been placed. So we now know that the market is in a potential sell. Lo and behold, price sells and does what? Breaks structure. Okay, so price has sold and it has broken structure. What is that? That's a structural impulse that we require in the MMC footprint strategy. So now we know that, okay, so in this case, it's a bearish move, right? So price has made an impulse and broken structure. The next thing that we're going to be looking for is what? An S&D zone to trade from. Lo and behold, this is just a sketch, right? This is what I'm showing here, right? This is just a sketch. S&D zones don't have to be positioned on top here, right? An S&D zone can simply be in the middle of the trend or even near the bottom, right? It depends on the volatility and fragility of that market. Also on the nature of the S&D zone on its own specificity, right? But lo and behold, so let's now go and apply all the rules that we need to identify a strong and valid S&D zone, right? And if you don't know what those are, then make sure that you go back to the MMC footprint playlist and watch all the supply and demand videos for you to be able to be fully acquainted in this, you know, and be together through the whole session. Now, lo and behold, so from here, right, we need to see that last down move before the last up move before the down move started. Lo and behold, as you can see, right, we have different prices, right? We have here price went up and then came down. So this is an S&D zone, right? We have also, let me remove this to add more clarity. Also, we have this area here where price went up and then came down, right? So this in itself is what? Is an S&D zone, right? We also have this area here where price came up and then went down. So this itself is an S&D zone too. So with that being an S&D zone, that means that we now have three major S&D zones from this area. Lo and behold, so we had this, right? This right here. We had this one up here and this one down here. But according to the rules of mitigation, right, this was the most potent S&D zone. Why? Because it had imbalances that needed to be filled with an up move, right, that could also come and mitigate this S&D zone before triggering the final down move in continuation to the trend. Lo and behold, that is exactly what happened. So from this point, right, from this point of having this high and this low, all you need to do is waiting, right? Being patient. That's the most important and consistent part of a trader, right? Patient traders are the ones who almost always get rewarded. Okay, so pardon, I got a call for a bit and I had to like pause and then resume. But as we were saying, right? Once we have all things together, all we need to do is wait. Why? Because patience is key and the patient traders are the ones who almost always get rewarded. So we have a high and a low. So from here, now what we can do is zoom in into the price action now and see the exact thing that's going on in terms of candlestick structure, right? So from here, we're now going to start focusing on this intermediary price action here, right? This intermediary price action. This is what we're going to focus on. So from here, from this low, price went and then broke higher, right, to initiate the pullback, right, and started creating higher highs and higher lows, right, consistently breaking structure, creating new highs, right, breaking structure, creating new highs, right, breaking structure, creating new highs, right, breaking structure, creating what? New highs. Lo and behold, from this area, right, because this impact here, this is where price now tapped our supply zone. So from there, what we can do is now zoom in and see what's happening in here, right? So we had a high, a low, right? A high, a low, right? A high, right? and then now price comes down to what? To take out this low, right? Comes up, mitigates a little bit, doesn't give you that much clear of an entry, right? And then falls down again, takes out the low, right? So from the Dow theory of structure, right? It's been said that when structure breaks twice, then the newly initiated structure is more likely to hold. Lo and behold, that's exactly what we had, right? So we had an uptrend that was now what? Broken twice, right? To initiate or show the continuation or the shift from bullish to bearish is very strong. Now, lo and behold, from this break here, right? So let me clear those. So from this break here, look at what price does, right? So price breaks here, and from that break, price leaves what? A supply zone, which in turn comes up, mitigates, and then what? Falls down. So in terms of entries, so this is like your entry number one, right? So this is your entry one. So what we're going to do is start scaling ourselves in from this area, right? With our stop losses above the intermediary highs, and our take profits are going to be all the way down here. So what we're basically going to be doing is scaling ourselves in from the beginning of the pullback to its end, right? So that's your entry number one, because we know that, okay, so price has broken structure, has come back and retested, right, and has now confirmed to continue bearish. That means we're 99% sure that price will go bearish to this point here, right? Regardless, whatever the fuck it's gonna do in here, right? If it decides to go upward, if it decides to go up, down, or sideways, or in fucking circles, right? It's just gonna go down to this point, right? Regardless of the fact. Now, that's why we're gonna start scaling ourselves, positioning ourselves as much as possible within this trend to make sure that we get the most money that we can take. Now, lo and behold, that's entry number one, right? Okay, so from entry number one, price comes back down and does what? Breaks structure, right? Structure breaks with what? A high and a low. Lo and behold, you now have an S&D zone, which is in turn what? Entry number two, right? Off of that retest, right? So this is your second entry right there, right? Same thing happens again, right? So all these are, all these are winning trades so far. Lo and behold, what do we have? Another break. So a break, and the same thing, an S&D zone. Price comes back, taps it, and then leaves, right? Entry number three. So this is now entry number three, right? As you say, we're gonna start scaling and position ourselves. So this is the whole logic of scalping it, right? So you wait until everything perfectly falls in line, and once those things fall in line, you can now position yourselves as much as possible, right? And take every little bit of move in here that could actually secure you huge tons of money, right? That's why I came up with this in V50, right? Why? Because V50 is like one of the most volatile VIXs, right? There's a lot of cash in here, right? Just a small move can leave you a hell of profitable. So now, judging also by the minority of our stop losses, this allows you to use a bigger lot and actually get the bigger cash from here, right? So we're just gonna follow the same things, right? So from here, right now we have a high and the low that did what? That caused this break of structure. Lo and behold, we now have what? An S&D zone, right? And from this S&D zone, we can now position ourselves and call this an entry number what? Okay. Holy shit! What did I just do? Yeah, boom. So yeah. So this is entry number 4, right? Yeah, entry number 4. We're just gonna reduce it there and leave this pending, right? So that's entry number 4. So from here, you've already got 4 entries, and price is still keeping on moving, right? So, and yet again, from this area, right, I would recommend you stick with the 4 entries. Why? Because when price makes runners like this, right? So I like to call these runners, right? Some people call them, I don't know, whatever the fuck, right? I forgot the name. Rally, yeah, it's rally or some shit, right? But I like to call them runners, right? So when price, does this, right? When price goes up and then, confirms that it's now shifting bearish, right? More often than not, it will leave one or two entries, one, two or three entries, sometimes even four or five, and then leave that runner, right? This little thing here, right? I call it the runner, which is exactly this one here. When price makes this runner, I strongly suggest you just stick with the entries that you have, because what price gave you entry number one, entry number two, entry number three, entry number four, and then made the runner, right? These runners are the ones that provide us the most of the money, right? So up to this point, right, our orders, right, the first order, the second order, the third order, and the fourth order are running in deep profits. So there's actually little or no need at all to continue positioning yourselves in moves here, right? Why? Because this could simply be like an overall pullback from this high to this low, right? That could run deep here and then like fall off again. So to avoid these kinds of risks, once price makes the runner, just stick with the entries that you have. You'll get it again. These moves happen always, every day, and like every now and then, right? It's what the market does. It's what the market always does, right? It's not something that you spot once in a week. No, this is a type of price action that occurs every single day, right? So there is no need to rush. There's no need for anxiety that like blaming yourself. I didn't get in, price made the runner, and whatever the fuck, right? So regardless of price made the runner or not, one, two, three, four, five, at most 3 or 4 entries are totally enough in the risk management approach, right? But if you want to go for that money, there's nothing that stops you. Why? Because you use the same 3 things, right? You need to have just a high, a low, and an S&D point. As you can see, this perfect little mitigation here that you could position yourself to take this price even shorter. So with that being said, guys, I hope whatever I taught you guys on this video has made a lot of sense, right? And if it has, then make sure you like the video, subscribe if you haven't, turn that bell button on, and of course, right, if you want to get in-depth part of this knowledge, right, you want to go into the overall depth and the premium stuff, you could always DM us on Instagram at official Green Pips FX, and we'll be more than happy to receive you in our premium community, as the poster shows. So with that being said, guys, let's call it a day and stay safe. Have a nice trading week and peace out.